This is my 26th year here, and I look forward to coming here every year and hopefully sharing some insights in the market and things that are kicking around in space, ideas and things. Before we get started, I do want to say that today, of all the 26 years, is probably my most special presentation and conference. My lovely daughter, a high school senior, it's her last chance really to see me in one of these things. Is sitting right here in the front row, and she was nice enough to. So thanks for that. So year review 2023. I was thinking about it, and I was thinking what really happened this year, and in a sense, it's a year of shattered illusions, right? We thought maybe going into this year that Ukraine could get settled and we could have peace there, and then maybe that would kind of keep China back, and then that would actually be very positive for the market. Well, that's not happening, right? Government debt, we've been, particularly in this panel and me in these presentations, have been talking about the level of, the unfettered level of government spending and the crazy level of debt, which even a couple of years ago was 25 trillion, and that was in 2019, and now here it is 24 years later, and the government debt is 33 trillion. It's got to stop. It's got to stop growing at $1 trillion a year because you can't afford it. So the government debt, I think, is now finally hitting all the major newspapers as a problem, and so that's another shattered illusion. And we have another slide, and again, this is, people go back and forth on this, that the sustainable energy is working or it's not working. Every time we see whales washed up on Long Island and they're saying it's not related to windmills, maybe it's not, I don't know, but I'm sure it seems like there's a problem out there. This one is, I've been saying that I think for at least 2-3 years, China's got problems. I mean, I personally was born in Hong Kong. My daughter and I went there in 2019, actually the last window really to see Hong Kong. Is beautiful, it's always been. I got family living there. My dad grew up in Shanghai. And we've actually created a business there, Golden Gate Homes. We were selling houses on the West Coast to Chinese nationals. This goes back to 2013, and interestingly enough, the last house we had sold to a Chinese citizen was sold in 2021, which is right around the time a lot of problems started happening in China. So I think there was a liquidity squeeze among the wealthy in China, and that was exhibited by them selling their homes that we had sold them in the United States, which we managed for them. So one of the illusions, I think even 6 months ago, they were saying China's going to be the next superpower and is going to overtake the United States as an economic superpower. Even when I read those stories, I thought it was hogwash, but now it's more obvious that that is not the case, and we have a couple slides on that. And we're just talking about the tip of it, and I think we'll talk about it more next year because of some of the deals some of the bankruptcies that are happening, including one here in New York, which some of you may be working on. And then the last one is inflation, which is temporary. I mean, this is not a 100-year problem or even a 10-year problem, but right now we still have inflation. There are ways to fight it, and I would say that it sounds like maybe some of the steps are working, but again, to beat inflation, you've got to slow down the economy, which is good for everybody in this room, and so the best way to beat inflation is to have a recession. And I was also racking my brain just as to why we've had so little inflation over the years, and I really do think there's a connection between the internet era and what happened there with, let's say Amazon and some other, fully forward companies that created a period of deflation. I mean, deflation beats inflation, right? So, but you have to have productivity to do that. I'm not sure what I just did. Okay. All right. So, noteworthy events of the past year. Events in the Middle East and Ukraine slow growth, resulting. Oh, wait a minute. This is my 2014 slide. Geez, that looked like I could have written it yesterday. But so, 9 years ago, we were just going through the slides. This one comes up. I'm like, holy Christmas, that's like this year. So let's see what we said 9 years ago. With chaos in the Middle East and in Ukraine throughout the year, one would have expected oil prices to have risen in 2014. Instead, in August, oil prices cracked. Do you know that oil prices this year were flat? We had a spike in September, but now they're right back where they were. So, in a sense, this has repeated itself. And then, there was a moment, it was actually right at that conference, which is another reason. It was the Friday before the conference, so it was after our Thanksgiving, right? So the world news is kind of quiet, particularly in the U.S. And the Russians went to the Saudis and asked them to cut production so they can move the price up. And the Saudis refused. So then on that Monday, and I think you heard it here first, and then on Wednesday, they finally hit it in the papers. It said, there's more work here. Are Saudi Arabia, the UAE, and Kuwait pumping oil to apply pressure to Russia and Iran? And of course that was true then, and it's even true now. So that's 2014. So now let's get back to this year. 2023, events in Ukraine and the Middle East bring us back to the future. Russians' aggressions in Ukraine are at a stalemate, with perhaps Russia signaling a desire for negotiated peace. I mean, I think that there's a deal there, and we talked about that last year, but it's going to be an awful winter for both sides. I guess now the Ukrainians are using their drones to start hitting Moscow. But yet the word of nukes hasn't, which was so prevalent about 6-8 months ago, last August, I think it was August 2022, they're talking about nukes. No one's talking about nukes anymore, which is a very, it's a positive. Keep that in mind. This is relevant to what just happened, like 6 weeks ago. The Abraham Accords and Israel's strengthening ties with Sunni Muslim nations is deemed a threat by Iran to their influence in the region. But none of the key Sunni oil-producing nations have broken ties with Israel. The Velvet Glove realignment of the Mideast that started in 2019 and 2020 may bring peace to the region. I think that this is very positive news. We have a slide about this a little bit later, and just keep this in mind. And I just made the point, it was the same point I made earlier. In 2014, we asked Saudi Arabia, UAE, and Kuwait pumping oil to apply pressure to Russia and Iran by lowering prices. And now I think there's no doubt that was true then, and it's clear now, and it's clear what the teams are and which country is on which team. And from an investing standpoint, investors like clarity. We now know, we're starting to really realize what's going on and what, who's on what team in the Middle East. Fed watchers interpreted Fed Chairman Jerome Powell's November remarks as suggesting rates could be reduced as much as 2.75% by March 2024, which incidentally would be absolutely perfect timing for the economy to be robust by the September kickoff to the presidential election campaign. So I actually put some credence in this point, but this may be a result of slowing growth, but it would be great for the real estate market. But really, can a Fed guy, can a Fed chairman just push interest rates down when everything else is telling them you can't do it? So that'll be interesting, but at least that's out there. And I think that's also why some stocks have done a little bit better lately, and the bond market. I think people are now anticipating that the increasing rates, the Fed fund rates increases are going to stop, and they may start declining. And again, I've said this in prior conferences. I view the Fed as highly political and has been for 3 decades. So they're aligning themselves with their own team. That'll be when, it may be true that they'll try to reduce it. No really corporate events in the past year. Many in this room know this, some of you don't. On August 14th, the jury found 8-0 that the cash sweep put into Fannie Mae and Freddie Mac in 2012 was illegal. The jury ordered the government to pay damages of about 40 cents per share, but pre-judgment interest could double that. So stocks moved a little bit, not a lot. And interestingly enough, and some of us in this room are going to talk about this later, that if you're found guilty of a cash sweep in 2012, what about the cash sweep in 2013, 14, 15, 16, 21, 22, and 23? So, we'll see what next lawsuits are coming, what the real reaction will be. But it's an interesting thing to watch. And I know the panel, Gary here, so we'll be talking about that again. In October, I filed for bankruptcy. I guess Josh will be the guy to talk to about that. in large part due to the selling of the opioids, the claims. And I just pointed out that several years ago, I think it was the FTC that stopped the sale of the majority of the stores to Walgreens as anti-competitive. Well, now we have no competition. So probably that's going to end up with a sale once they sort out the opioid claims. Probably somebody's going to end up buying the stuff. I mean, the store base, or a good chunk of the store base. We work, once valued at $47 billion, filed for bankruptcy. I didn't put this up here because of this reason, but my cousin was actually the chief operating officer for the restructured company that went public at, I think, $8 billion or whatever. And then he left right after that. But that was that short-term rental office building business, or office business. This one's interesting, and I think we can talk about this more next year, and I think it goes back to my first slide, which is the shadow illusions about China being a superpower, this economic superpower. I've been saying here in these conferences for years that when you go to China, there are whole cities that have no one in them, right? They build the buildings, and each apartment in the building is vacant. And in fact, when we started selling houses to the Chinese, a decade ago, a lot of the owners would say, "Well, I don't want to tenant in my property. Just leave it vacant." And we're like, well, "What do you have in your mind? I mean, why would you leave a house vacant? And you're going to be paying all this HOA fees and property taxes and all that." And it took some convincing for a lot for some of them, but eventually they got with the USA program, which is, you own it, you rent it, right? And then you let the valuation of the property ultimately go up, and that's your whole rate of return, is the growth in the equity value, and then your cash flow that would pay you, quarterly or monthly or yearly. So here, Chinese real estate developer China Evergrande filed for bankruptcy in New York, and I'll talk about that in a second, in August. And Evergrande reported debts of $335 billion. I can't even imagine that number. I mean, I don't know if we've even had a bankruptcy that big ever in this country. With Alan said, I mean, I think of some of the airlines, even they didn't have that much, right? I don't think anybody's even broken the $100 billion mark, but you guys tell me. So, but that has a spiraling effect because it's really a captured economy, right? So if a company that has been blessed by the Chinese government to take on debt of $335 billion is now going to declare default on that, right? That's going to flow into the banks that are basically also sanctioned or approved by the Chinese government. It's a closed system, and it's going to have some problems as they flush all those losses through the system. And again, these are towns or cities that are built with no one in them, right? And in the case of Evergrande, there's about, I think, 500,000 to 1 million homes that they've taken deposits for that they have not built yet. So those people, which will be, again, relatively wealthy Chinese, are going to lose their savings of that investment. And we know if we had losses like that in this country, we would, people in this room may not feel it because there'll be bankruptcies for all of us to work on, but the rest of the country is going to feel a number that big. So that's still working its way through. But I also find an interesting thing, and this is a credit to really the U.S. system and everyone in the room. They didn't file this in London. They didn't file it in China. They didn't file it anywhere but in New York City and in the Southern District. And why? It's because the laws in the United States are the best in the world, and frankly, the bankruptcy professionals, that work out of the New York District, which could also be guys from Chicago and elsewhere, are among the best in the world. This is why New York is so special, and the United States is so special. We have the best laws, and we follow them. And fill up, create a ditch on one side and fill it up on the other side. Was that really economic progress? I mean, economists are still debating that, even though I think it's relatively settled, that was wasteful and probably prolonged the Great Depression. This is some version of that. And so it's something to watch. Now, comparison returns, this is kind of interesting. So the Dow was up 6%. Some of us with all this bad news going on think, oh, it's not such a good year. But as Josh mentioned earlier, it kind of is a good year. And so here we have the Dow, which is older stocks, less tech stocks, they had tech stocks, they get diluted. It was up 6.6%, 6.7%. The S&P index was up 18.5%. But next year I'm going to break this out and have an S&P 493 index and an S&P Super 7 index, right? And we have a slide later on, but that started hitting the media about 2-3 months ago. When they're talking about all the growth in the S&P is these 7 companies, which I have a slide on later. And everybody else, the other 493 are about flat or up 2 or 3%. The NASDAQ has a similar thing with the tech stocks doing pretty well. And again, I think that that's last year, both those groups got slaughtered in the overall, the year summary. And it was because last year the interest rates were expected to rise, and they did rise, particularly this year, early in the year. So it's how the market projects. Now I think that some of these numbers are the market now projecting that the interest rates are going to ease up, and those are stocks. You have you're really trading on PE value, not on cash flow. It really matters what the interest rates are doing. The 10-year Treasuries lost money this year. They went from a 3.76% yield at the beginning of the year to 4.42%. So as the yield goes up, the bonds that you had last year, the value goes down. It led to a loss of about 5.2%. We've been short the 30-year Treasuries, so to me this is like I reverse that, make that a big, blue number, and the 30 years we're down about 15% this year. That we closed our short a couple months ago. What a fabulous trade that was. The high yield index is about 14% again, with the easing of interest rates, bonds pop. The stress funds, according to Eureka Hedge, were up about 5.5%. Gold is up 10.4%. Again, with inflationary expectations, people pile into a hard currency. Again, it's difficult to trade, and there's commissions up in and out. It's like trading real estate a little bit, but it was up without trading. It was up 10% this year. Went from 1,800. Gold's now above 2,000. Oil prices. This surprised me, but again, it goes back to that first slide, which is who's really running the oil industry right now. Is it OPEC as a monolith, or is it the Saudis and is it the Sunni countries that are saying, like, look, we're not going to abide by helping support Russia as much as Russia wants to be supported. So the oil prices were kind of flat, down 7%. They hit a high of 91 in September, which is 2 weeks before the crisis in the Middle East started. And I find that maybe perhaps not coincidental, but maybe not. And then and today it's about $74 a barrel. We got a slide later showing that. Macro environment 2023, and one tagline here is, there can be many comments, but Russia's ability to sell oil to China has actually helped both economies. The GDP of China last year was 3%, which is the lowest number I've been reported to this conference in 20 years. It's usually 7%, 9%, now it's 3%. The GDP of projection for this year by the IMF, the forecast based on October of 2023, so about a month and a half ago, 2 months ago. I believe that that's not going to be the right number. I think that's going to be lower, and because it's not including the fallout from the China Everglade, which, of course, China can mask that for several years if they want to. But anyway, they're up on a year-over-year basis, they're up 167% on the GDP. India has declined a little bit. I think that's probably more indicative of what's going on in the region. That's the sub-Asian region, but still in the region. Eurozone's gotten whacked, of course, because of the war in Ukraine and all the tragic dramas that have happened as a result. U.S. has been flat. I think that's a fair representation of what happened in the United States. Japan went from no growth to a little bit of growth, and Russia, again, because of their ability to sell oil and evade sanctions, has had a pretty good year. 2% per year. It's not a great year, but it's not bad. As an economy, they need much more than that because they're so underdeveloped. So oil questions. Are any of our illusions shattered? Okay, so this is the only participation point here in the presentation. So just like a show of hands, other than my daughter, I'm not taking grades of anybody here. So yes, no. Is Saudi Arabia the largest oil producer? Who thinks yes? Put your hand up if you think yes. Okay. Is Russia not in the top 5 oil producers? Anybody who thinks they're not in the top 5? Put your hand up. Okay. Of these 3 countries, and I'm going to say Saudi Arabia, Russia, and the United States, who is the number 1 oil producer? Is it Saudi Arabia? Any takers? No. Is it Russia? No take. Is the United States? Everybody thinks the United States. Okay, that's interesting. That's great. And yes or no, is Venezuela one of the top 5 oil producers? Yes or no? A few yeses. Okay, great. Okay, so, and then, well, Alan, this is a question. I was going to say, has world oil production gone up or down since alternate energy progressed from 2013? We'll have a slide of the oil production in 2013. You think that has the world production of oil increased or decreased? So anyone say increased? Isn't that? Anyone say decreased for the alternate energy? Maybe a few, but not many. Okay. So here's the data. What did I do? Oh, here's it. Okay. So we got three columns here. 2013 daily production barrels. That's daily, right? And that's in thousands. So that's not for Saudi Arabia, 9.6 million barrels a day. In 2019, which is pre-COVID, so it's like the last clean number. It went up slightly to 9.8 million a day. 9.8 million a day. Today it's at 12.1 million a day. So it's gone up, it's 25% in just a couple of years. Iran, interestingly, went 3.5 million, and then in 2019 with sanctions, they were cut in half, basically, or down by 50%. And now they're back to where they were here in 2022. Iraq picked up the slack from Iran. They were about 3 million a day. Now they're at 4.5 million a day, and still 4.5 million a day. The rest of the country is more or less, everyone's slightly increased. Oh, Venezuela. So in 2013, 2.8 billion barrels a day. Today, 700 million barrels a day. It's the economy there has been devastated, and there's been flight of sort of the technocrats class in that country, and they're a fraction of what they were. Jumping down to the bottom, and many of you had anticipated this. In 2013, we were doing 7 million barrels a day. In 2019, we're up to 12 million barrels a day, which beats Saudi Arabia, and frankly beats Russia. And today, we're at 17 million barrels a day, but that includes some sales from the Strategic Oil Reserve. So some people are saying it may be closer to 15 million. We'll see what the numbers show for 2023, because I don't think they'll be as high as this, because they've been slowing down the sales from the Strategic Oil Reserve. But Russia's gone from 10 million to 11 million, which is pretty steady growth. And again, it doesn't seem like there's any impact of sanctions on them, since they're still doing their historic levels. They maybe get impacted a little bit by price by having to sell to China at a lower price than, let's say, the world market at a higher price. But nonetheless, they're selling the volumes. So total world oil production from 2013 was 72 million barrels a day, and now it's 93 million barrels a day up. That's almost 25% growth. So the world continues to create and consume oil. And I could put up a natural gas line, we don't have time for that, but that's, and that'll also show the same thing. By the way, and if I asked my daughter this, she'd answer this, is that LNG, sweetheart, they're the way of the future, right? Yes? No? No? So LNG is liquid natural gas. You take pure gasoline without all the impurities of oil, and if you can convert that into gasoline, which they can, that could be a pure form of driving a car. It won't be maybe as pure as nuclear power, for example, but it would be it could be better than oil-based fuel. Shattering illusions. The stress industry has world-class people. I don't know, thinking Steve Gilmore saying up there, so of course it has world-class people. What are we talking about here? So, but in fact, we have one from our own midst, David Friedman, former senior partner at Caswell Benson, who probably half the people in the room here have met. Unfortunately, I was always on the other side because he was a debtor representative. So as a creditor guy, a bondholder guy, he was always the guy against us. He was always kicking our ass and stuff. But he was one of the, he was appointed by Trump to be ambassador to Israel, which everybody in the room should knows. And he was one of the architects of the Abraham Accords. And the theory there was that the real split was not between Arabs and Israelis, but instead between Sunnis and Shias. And we're saying that, I think that the peace, if they could continue to pursue that, and from 2020 to now, we would have Saudi Arabia basically in a very close formal alliance with Israel, and that would change things. So here's this slide. So my question is OPEC a monolith, or is this a loser shaft? So this is OPEC's production versus country population. And we also put in sort of a religious affiliation. So the top part, which is like 2/3 of it, are many of the biggest oil producers. I think, and totaling almost 25 million barrels a day. And all of these are Sunni majority countries. Saudi Arabia at 80%, UAE at 83%, Kuwait at 65%, Qatar 90%, Algeria 99%, Libya 90%, Indonesia 90%, Pakistan 76%, Egypt at 90%. Here's the population. The population is almost 1 billion people, so 3/4 of a billion people, and with daily production about 25 million. On the other side, I'm probably missing one or two, but they're smaller. But the main ones are Iran and Iraq, with 8 billion barrels a day of production. And the population areas in both these countries are relatively large, are 131 million. So what the Abraham Accords envisioned was that we take the top group and line them with Western democracy, Western-like democracy, and see if we can basically bring peace that way. Okay, that's enough on that. Now, the shattering the electric vehicle illusions. The map of U.S. charging stations. So, are you ready to drive cross country in your EV car? Right? So, this is their map, right? I mean, I didn't create this map. I downloaded it from Electricity of America. And they basically tell you there's two routes. You can go from basically northern Florida, there's a green route down there, and you can take it to basically San Diego, and you probably got a charging station along the way. Or you can go from basically, what is that, kind of Philadelphia, Maryland, D.C., and go through sort of the center of the country, but not up. You can't see the beautiful Northwest, like the Dakotas, Montana, and then again, you have to go down to San Diego. All roads lead to San Diego, guys. And those are your two main routes if you want to kind of see the country. I don't know, when I did my cross-country trip as a high school, as a junior in college, I kind of went to Montana and the Dakotas, and I don't know if I saw Minnesota, but definitely saw Kansas and Utah and Chicago. I guess you can't do that in EV. So here's what happened, why I call it shattering the EV illusion. And basically, this is stating the obvious. The world is not ready for the EV transition yet. And so these are EV-related stocks, and they're in steep decline in the last 2 years. Rivian Auto went from 160 2 years ago, and a little bit date, 5 minutes. So that's down like 90%. Fisker down 90%. These first four are all electric vehicle companies. You see footnote 1. The next two, Sunrun and SunPower, are solar companies, and they're down about 80%. The last two are plug-in companies, Plug Power and EVgo, and they got hammered also. And these are all public stocks, and you see what investors and what their results have shown in the last 2 years. And then this is another view. This is the U.S. Department of Energy showing they say that every U.S. charging station is on this map, at the time that they did it. So they're saying there are 26,000 EV charging stations versus 168,000 gas stations in the United States. So, what is it, 6 to 1, 7 to 1, 7 to 1 ratio? Yeah, about 6 or 7, 6.5%, 6.5 times. So that's the EV side. Federal debt and inflation illusions. What is the risk-free rate demanded by world investors? And this goes back to years ago, 30, 40 years ago. At work, we had to study this. And my footnote here is in Journal of Finance, circa like 1974, they're basically saying that the risk-free rate is about 2%. And it sort of corroborated during COVID, because there we had no inflation, and the U.S. Treasuries for 30 years were trading around 2%. And for a long time, Coca-Cola has been trading at a 4% return, but that's not risk-free, right? Because that's a corporation, not a U.S. government. So if somebody like a U.S. like Coca-Cola that has a steady cash flow is not, is a 4% return, the risk-free rate is probably around 2%. So if you can take then you take the risk-free rate of 2%, add in the inflation rate,
and then next year risk-free return adjusted for inflation. So you take 4.5%, so 5% inflation makes you need 7% long-term, 7.5% inflation needs 9.5%. So we had this slide last year, and I've just updated it. The total U.S. debt now is 33 trillion, and probably in 2 or 3 years will be 40 trillion. If you take an interest rate of 3.75, which we are not at today, that's a total interest cost of 1.2 billion, and that would be 46% of the U.S. government mandatory spending, and a good chunk, about 1/3 of all the revenues from the IRS. And then if you get to 40 billion, you're talking about 57% of government mandatory spending, and then in the worst case, at 8%, which is kind of where we're sort of heading, is at 71%. This is unsustainable. And how much house can you buy at a given interest rate? So in 2019, our Golden Gate Homes, we took some of our data. Mortgage, we were selling homes at a mortgage rates, the buyers were getting mortgage about 10% in 2019. That you could, with a $2,100 a month payment, not including property taxes. So we're setting the payment, right? That's the constant. You could buy a house at $500,000 in 2019. Then in 2022 at 5.5%, which is what they were getting, that same $2,100 gets you a $370,000 house. And today at 8.8%, which was the rate like a month ago, you can afford a house at $266,000 for the same $2,100 a month of mortgage costs. So that's the effect, and the question is, are high interest rates evaporating home ownership? Well, some say yes, I'm not sure right now. So here's the China, I'm going to cover this one quickly. Our Dow Jones was up, the Hang Seng was down, and the U.S. to the won has basically held firm. Last year, the U.S. picked up a lot. Bellwethers, let me get the next one. These are the special, the S&P Special 7, which that we can talk about more maybe next year. We claimed all their lost ground for 2022. These are the Special 7 that make up the bulk of the growth in the S&P. Apple, Amazon, Facebook, Google, Microsoft, NVIDIA, and Tesla. You know all these companies. And we're looking at returns this year, 46% of the low to 227%. That's NVIDIA, which is the artificial intelligence company. And Tesla was up 100%. Facebook was up 180%. And these big behemoths drove the returns of the S&P. So what to watch for? It's back. Another presidential election year. Election year is usually good for the stock market. Can the Fed stop spending? Is spending binge? Who knows? The data shows Russia and Iran are producing oil at their peak rates. Where are the sanctions? And the fallout from China's Keynesian economic mismanagement should be starting, and we'll see more about that. We did talk about that. And will new nations, particularly in Europe, reverse course and bring back nuclear power production? The cleanest form of electricity is nuclear. It probably needs a second honeymoon. In conclusion, hang on to your hats. There are reasons to be optimistic and real fears that events can get out of control. Putin, Xi, and Iran seem to be leading events in the world right now. We need the Western leaders to step up. We hope, at a more technical level, we said we expect 2024 to see an easing of interest rates as the Biden administration seeks to stay in power, as any administration would want to. So you lower the interest rates if you can do it, but how can interest rates stay low with so much debt? So that's my presentation.